Hey, this is Mike, and today I want to talk about my favorite trading strategy and why it should be your favorite trading strategy, and that is cash secured puts. So before I get started, if you can please do me a favor and leave a like on this video, it'll help this video be discovered by people who are interested in cash secured puts, because I want to give like a pretty simple overview of the strategy I've been using that's been very successful for me. So for those don't know what a cash secured puts are, it's a very conservative trading strategy where you sell a put and you put up as collateral the cash equivalent of 100 shares in that stock or ETF that you sold the put on. So for instance, I'll use GameStop because I'm a big fan of GameStop. If you were to sell the 12 put of GameStop, you would put up $1,200 which is the equivalent of 100 shares of that stock at the strike price. So it's a pretty simple strategy, and it's a very conservative strategy, and that's one of the reasons why a lot of people who start out trading will kind of ignore cash secured puts because they want to make a big kill in the stock market or whatever. But I'm going to show you that cash secured puts will actually be a better path to growing your portfolio, because it has been for me. Because look, I've been in your shoes if you've just been starting out, where I looked at cash secured puts as like an old man trade. But sometimes old is wise, and I wish I had learned about this trade when I first started out, or I knew about the trade, but I wish I had followed this trade when I first started out. So I'm going to show you a strategy I've used that's been pretty successful for me. So this system I use, I work with weekly option trades because you get more trading opportunities, and I sell puts at the Delta 30. So the Delta 30 is a Greek that you'll find on an options chart. You could go to, just put in Google, in the Google search box, CBOE, that's Chicago Board Exchange, CBOE options chain, and you'll find the website and you'll find what Delta 30 is. That means that put option has a 30% chance of closing in the money at expiration. So that means automatically that when you sell that 30 put option, that Delta 30, you already have a 70% chance of winning. So that's great. However, to make your chances of winning even higher, what you want to do is just target a 50% profit. So for instance, let's say that Delta 30 on GameStop, that 12 put, is being sold at 80 cents. So that means you automatically, when you sell that put, you get $80 in your account. However, what you're going to do is you're going to buy back that option that you sold before expiration for $40. So you keep $40, you keep 50%. When you do this, you have a 90% success rate. Now, a success rate means nothing if the loss rate is extreme. So, for instance, this has a 98% success rate. That means there's a 10% failure rate. But because you're closing the trade at a 50% profit target, you save yourself from any big downdrafts in the stocks that tend to happen sometimes like days before expiration. So your losses won't overtake your successes. So for instance, when I've been trading, my 10% losses are 4 times the profit target of the success rate. So just for instance, let's say there's an option and I'm looking to collect $40. If that option goes against me, I'll tend to lose $160, which is four times the profit target. But because I'm winning 90% of the time, those losses will never overtake the amount of wins. So the bottom line is that when I use this system, I'm making a lot of trades. I'm getting a lot of small wins. Yes, I get a couple of big losses, but in the end, my small wins equal more than those big losses. So it's a successful, profitable system. As I stated before, I use weekly options, and that's because I can close these options at a 50% profit anywhere from 2 hours to 10 trading days. Those 2-hour trades will close if, let's say, I find a stock that's rising quickly, I sell puts on it, and that stock continues to rise. That put can hit its 50% profit target in a matter of hours. Typically, for me, my trades have lasted about 5 trading days. Like I'll open a trade, like say on a Thursday, and then I'll close it the next Wednesday. That seems to be the pattern for me. I hit that profit target about that next Wednesday, which is about 2 days from expiration. So I love that. And the thing you have to know about trading systems is that you want to find a trading system where you can do a lot of trades, because the more trades you can do, the smoother your profit curve is. If you have a trading system that only trades 10 times a year, well, your profit curve is going to be very erratic. So you want a trade that gives you a nice smooth profit line upward. And what I like about weekly trades is you can make anywhere, like sometimes I've made 3 trades in a week. It's usually typically 1 trade. If the stock's moving very quickly upward, you can make 2 trades. If the stock is moving violently upward, you can make 3 trades. So more trading opportunities, more profit, smoother profit curve. Another thing is, this is a strategy I use to get higher premiums, and also make sure that I have a stock that's not likely to be put to me, that stock that's not likely to fall below the strike price I sold. First, I look for a stock that is above the 50-day moving average, and that 50-day moving average is above the 200 days. So basically a stock that's doing very, very well. What I want to do is I want to buy that stock when it's had a bit of a pullback. And I define a pullback as a 5% decline within 2 weeks. So like I said, the stock has fallen 5% within 2 weeks, but it's still above the 50-day moving average. Because the stock has fallen, the premiums on the put are going to be more expensive than usual. So that premium could be anywhere from 1% to 4% of the price of the potential return. So for instance, I'll use GameStop again as an example. GameStop has been rising, and then it had a pullback because when a stock rises quickly, it tends to have a little bit of a reversion to the mean. The premium on GameStop's Delta 30 put was about 4%. So I sold the put and bought it back at 50%. That gave me a 2% return in 5 trading days. And usually you kind of get more like in the 1.5%, but think about it, a 2% return in 5 trading days. You get 4 to 6 trades a month. That's anywhere from 8 to 12% per month in a very conservative trading strategy. And you're only in the trade anywhere maybe from a couple of hours to 5 or 6 days. And like I said, the weeklies are usually anywhere from 4 days to 13 days to expiration. So it's a conservative strategy, but it gives you surprisingly high returns. I know if you're investing in Tesla and Tesla goes up 5% a day or whatever, it says, well, who cares about 12% a month? I want 12% in a week. But that's not realistic. This is actually a more realistic return. Now, you do get losses that'll cut into a 12% return. It's more like, I would say, 5 to 6% return, but still, a 5 or 6% return a month on your portfolio, I think there are not a lot of people who would turn that down. Also, what I love about cash secure puts is it's a forgivable strategy when you're wrong. So let's say with that GameStop, that 12 strike put, let's say GameStop falls below that, and at expiration, the stock is now at 11. Because I did not hit that 50% profit target, I actually keep the entire premium that I sold the put for. So if I sold that put for 80 cents, I got $80 in my portfolio. If the stock falls, let's say, to 11, now I keep the $80, and I'm actually down. The 12 strike means I have to buy 100 shares of GameStop at $12. For $1,200, I now own GameStop at 11. So that means I lost $100 on the stock purchase. However, because I kept that $80 premium, I'm only down $20. And the best part is, once I own 100 shares of the stock, now I can run a covered call the next week, which is what I do. And this is known as the wheel strategy. The wheel strategy is when you do a cash secure put, the stock falls, you have the stock put towards you, you now own the shares, and then you run a covered call. I love it. It's very forgivable. I've done a lot of trading strategies that are not as forgivable as this. And the first rule of trading is don't lose money. And the great thing about cash secure puts is if you're wrong, you protect yourself. And another way you protect yourself is you only use stocks that are above the 50-day moving average, because that 50-day moving average line is like a floor of support for your stock. And it's been very helpful for me. It's one of the key reasons why the cash secure put strategy has been very profitable for me. And finally, cash secure put portfolios, cash secure put strategies are great for any portfolio size because you have stocks you could do a cash secure put on that are $5 a share or $3,000 a share. So whether you have a portfolio that's under $1,000 or several $1,000,000, you can do cash secure puts. The same can't be said for stuff like iron condors. Some other income generating option strategies are a little harder to do because you really can't scale them up as high. But for these, you can always find stocks at almost any price level. They're above the 50-day moving average. They have had a bit of a pullback, so they have thick premiums. It's great for any portfolio size, and it's just a wonderful strategy. And I definitely recommend if you've sort of ignored or dismissed cash secure puts, please look into it because it's been the one strategy that has worked for me. And trust me, I've been trading now for 25 years. I've done it all, and this is the one strategy that allows me to make money and it allows me to sleep at night. So I hope you enjoyed this video. If you did, please be sure to subscribe because I put out videos like this, helpful videos and breaking news on stocks every day. Thank you very much. Bye.